What's going on, everybody? Daniel Narado with Keller Williams, and today I'm joined by a super special guest, Kelly Belcher, aka the Mortgage Mom. Kelly, say hi.
Hi, everyone.
So first and foremost, we just both want to say we hope everyone's staying safe and healthy throughout this process. And I really wanted to have Kelly on today just to talk about, there's a lot of stuff happening in the mortgage world right now. So we just wanted to touch base on a few kind of hot button topics that we're seeing in the media right now and get some clarification in those. So Kelly, the first thing I want to ask you is kind of one thing we're seeing in the media a lot right now is being able to not pay your mortgage for like the next 3 to 6 months. But one of the things that isn't being talked about are some of the repercussions of kind of doing that. So one of the terms that most servicers are offering right now is something we would call forbearance. Can you tell us a little bit more about what forbearance is and what that process looks like?
For sure. So forbearance is like basically pushing back your mortgage. So the act that's coming through right now is if you have 3 payments, the next 3 payments, and you're pushing them back, they balloon on the 4th month. So for example, if you are not paying May, June, July, come August 1, you owe May, June, July, and your August payment. So like Danielle and I were discussing earlier, your payment's $2,000 a month, you're going to owe $8,000 on that 4th month. So it's really not a huge advantage to go into forbearance if you're able to make your mortgage payment.
Yeah, and I think that's super, super important because I think a lot of people, based on what the media are saying, are just thinking that they cannot pay their mortgage for the next 3 months. And forbearance is definitely a good option for people that absolutely need it and have no other choice. But for
Right.
someone that can make a payment on their mortgage, they should continue to make the payments. Am I correct?
Correct. And there's also other, you have a student loan, try to get that defer, get that deferred. Other like credit card companies, a lot of federal backed, they're working with you to get that deferred, and your mortgage should be like your number one payment that you continue to make for several different reasons.
For sure. So if I do have to go into forbearance, how is that going to affect my credit, and will it affect me getting financing in the future?
Right. So if you do go into forbearance, it will report to your credit as if you were in forbearance. It's not going to report it late for those 3 months, but it will show that you were in forbearance. So Fannie Mae guidelines state that if you have a home for the last 12 months, that we need a 12-month history, a mortgage reporting history. So what that means is if you are in forbearance for the 3 months, when you come out and you pay that ballooned payment, we're going to need at least a 12-month history going forward from there. So you're not going to be able to refinance or purchase with standard financing if you do go into forbearance for at least 15 to 16 months with a clean history.
Yeah. So best case scenario, you're looking at least, whether it's 3 months or 6 months of forbearance, you're looking at 15 to 18 months before you can really do anything financing wise.
For sure.
So like we said, forbearance can be a good option for some people if they don't have any other choice. So if I am one of those people and I have absolutely no choice but to go into forbearance, what are the important questions I should be asking my servicer to make sure that I understand the process and I know exactly what I'm getting myself into?
Right. So definitely only contact your servicer. In hard times, there's going to become, scammers are going to be coming out. You're going to be getting mailers. You're going to be getting calls, emails. Only speak to your mortgage servicer that you pay every month. Find out how what their guidelines work. So is it a balloon payment? Are you gonna defer the 3 months and then you're gonna owe the 3 months plus your 4 month on the 4th month? Is it going to the end of your loan? What interest is going to accrue onto your mortgage? So ask all of those important questions. After the 3 months and on that 4th month, if you cannot pay your mortgage, what happens? Is your loan going to be modified? And what will that happen to your credit report then if you do need to modify your mortgage? So those are important questions, only to be talking directly to your servicer.
Yeah, I think what we're trying to portray right now is just to get all the facts of what exactly the forbearance and your servicer, what that looks like, so that you have all the answers before getting into it, and that in 3 months or 6 months later, you don't find out that something bad happened that you had no idea about.
Right.
So switching gears a little bit, what, if any, changes kind of right now on the lending side with lending requirements are you seeing compared to maybe pre-COVID?
So we're seeing a lot of employment verification changes. So prior to, we were doing a verbal verification of employment within 15 days of closing, and that was it. Now we're doing several, sometimes before, same day of closing, after closing even. So I guess being upfront and having honest conversations with your loan officer, with your real estate agent, getting your, if you are still full-time, getting your HR contact. A lot of people are working from home, so phone numbers are changing, email addresses are changing, just getting all of that information so that when we do have to do the verbal verifications of employment, we have the contact information so we aren't delayed. Just if you are temporarily laid off, if you are cut on hours or you're cut on income, having that honest conversation so we can, be ahead of it, finding same day or a day of closing could result in not being able to close your loan. So coming up with a plan and all working together, really.
Yeah, no, it's good information. I know I can speak to that personally. I had a closing last week that closed where we had to verify both my buyer clients, their verification of employment same day as the closing for the funding to be authorized to clear. So they're definitely on top of that. I would say that's very important to them. They're making sure and tightening up and making sure that people are employed.
Right.
So obviously right now, things are a little bit different on our end. We're doing everything virtual, virtual showings, virtual meetings, consultations, appointments, but mortgage, title, and appraisers are all considered essential. So things are still moving forward. Like I said, we're all adapting throughout this kind of unknown process in COVID. But if I am in the market, I've been sitting at my house wondering, I need that new, finished basement, or my kitchen's a little bit small. So we're going to be moving in the next 3 to 6 months. If I am in that market to purchase over the next few months, what steps do I need to be taking to hit the ground running when that time comes?
Yeah, so definitely we do a full pre-approval. So we collect pay stubs and bank statements and W-2s. So getting your credit pulled, if there is anything on your credit that needs to be corrected or we can help with, we can do that. We can rescore. We can go through basically what you're looking at a new payment. We can do a quote on houses that are currently for sale. You can call Daniel and kind of do a consultation as far as what you're looking for in a house. If you currently own a home, again, call him and to do the consultation to go through. With technology, we have our Zoom meetings, we have our FaceTime, so you can basically, he can basically be in your home.
Yeah, to piggyback off that, honestly, I think all industries involved in real estate have pivoted and adapted quite well. So we are, whether you're a buyer, if you're a buyer, we are having consultations where we can go over exactly what you're looking for in your next home. And we can do that all virtually. I can connect you with Kelly, who's going to talk to you about everything you need to talk about over the phone or on a Zoom call. As well as if you're going to sell your home, we can talk about the updates that will bring your home value, what's worth it, what's not worth it, and stuff like that. So obviously, I just want to say thank you to Kelly for coming and sharing her knowledge with us. Do you have anything else you want to kind of add before we wrap up here?
No, other than, I think that we're going to come into the spring market and there's going to be a lot of houses popping up on the market. So if you are looking, just make sure that you're talking to Daniel and getting all of your criteria, what you're looking in on a home, talking to your loan officer and kind of going through payment and down payment, what you're going to need for closing. Getting all that done now is going to prepare you so that you hit the ground running as soon as, the market does open back up. And there's going to be a lot out there. And I assume that a lot of people are going to find out, what they're missing in their current home as soon as this market opens up. So I think we're going to have a busy spring here.
I completely agree. And I really do think there's going to be a surge at the end of this. And I think the people, the clients, the buyers that are ready and pre-approved and ready to go are going to be the winners in that market, because they're not going to be wasting time. So again, we just want to say thank you. We hope you are all staying safe and healthy, as we said. Thank you again to you, Kelly, for joining me. And we hope this video helps, and we'll see you on the next one. If you guys have any questions at all, please reach out to me. I can connect you with Kelly, and we'd be happy to help you. Take care.
All right. Bye.